Hi, Jonathan York from Bay Financial Partners, looking at the investment markets. There seems to be a little bit of a bigger shift coming out of the Fed now after the latest meeting. Before that meeting, most analysts and economists expected no real rate change from the Fed. That's what we've been led to believe in their commentary, etc., until sort of 2024. Now seems to have changed. Looking at it now, they're looking at potentially 2 rate increases in 2023. Now that's really on the back of the economy doing much better than anticipated. I suppose the one laggard is really still the unemployment data coming out of the US, where we're still looking for around 6 million jobs to be created to get back to pre-COVID levels. But certainly there does seem to be plenty of hiring taking place in the US at the moment as the economy gradually reopens. Obviously as well, the big other talking point is obviously inflation. The last print on that headline number was a 5% year-on-year number. So now it looks like the Fed will make the announcement to sort of start the end of tapering, sort of the end of 2021. That will begin in 2022, gradually sort of wind down from sort of mid-2022 to the end of 2022, and then the rate increases will start in 2023. Now that's obviously a pretty major shift, and the markets are just trying to come to terms with that at present. But really, it should be viewed as a good sign because the economy is doing well, and again, it doesn't need as much support as obviously it's been receiving over the last sort of 12 to 18 months. The other sort of big story out there has been the fall of sort of Bitcoin. That's nearly halved in value from sort of April until now. April time it was over $60,000. It's currently just over 30,000. Obviously on the enthusiasm for reopening of the sort of global trade, global economies, oil's trading still pretty well, above 72 bucks a barrel on WTI. UK still facing some issues with this sort of Delta variant of the COVID virus. That's sort of spreading quite rapidly through the UK, and obviously they had to delay their full reopening until mid-July. And now it's really just a question of trying to get on top of that virus so that they can sort of reopen in mid-July, because obviously with the summer and holiday periods coming up, that's really pretty important for the UK economy. Likewise for the European economies as well, they seem to be doing slightly better. There doesn't appear to be the sort of rampant increase in the sort of Delta variant coming through the European countries at present. Closer to home in Australia, facing some fresh issues with COVID, the Delta variant out in the community in New South Wales and Sydney particularly, that's facing some real issues out there. And as a result of that, the sort of Trans-Tasman bubble between New Zealand and New South Wales has been suspended temporarily. But Australia has been pretty good at sort of managing these flare-ups, and again, if they can get on top of it, the Australian economy really looks in pretty good shape. Really being helped by sort of domestic construction and obviously minerals and resources. Particularly iron ore is still pretty near record levels. Now here in New Zealand, we have a fresh outbreak of COVID potentially as well, with a visitor from New South Wales who was infectious, visited Wellington over the weekend, and Wellington has now increased its sort of level up to level 2. Although as yet it hasn't been confirmed whether it is the Delta variant, but if it is, potentially it could be quite serious for New Zealand. But in terms of economic sort of picture, again, New Zealand's doing very well. The GDP reading for the first quarter was plus 1.6%. Most analysts were expecting a sort of a small negative number for that reading. So again, on the back of that, the Reserve Bank now looks potentially like interest rates may start to increase by sort of mid-2022. Now again, that's been brought forward by around sort of 12 to 18 months. The issue the Reserve Bank faces, obviously, with interest rates so low, the OCR at 0.25, it's very hard to get it up to sort of 1% in sort of one move. It's going to be slowly and gradually sort of increasing because, to take it from 0.25 to 0.5, that's a doubling of rates. And that's obviously why it is a little bit of a different scenario from previous times where if interest rates were say 3%, you could quite easily move them to 3.5 or 3.75, and the percentage move wasn't that great. But with a very low base, the percentage move now is going to be pretty massive if you take it up to sort of 1%. Really getting to the last time to be able to check those KiwiSaver balances to make sure you've got that maximum government contribution. Really need to do that sort of ASAP. Interesting as well on the COVID vaccine rollout. The government is still facing fresh criticism and really looking very unlikely now to be able to get everyone vaccinated by the end of the year. Now, if you look at it from the New Zealand perspective and the economy, really, if you want international tourism coming here, you really need to get the country vaccinated. Now, in this low interest rate environment, if you are looking for income, it is pretty challenging out there. And if you're interested in discussing what is available, go to the website www.bayfinancialpartners.co.nz for lots of interesting articles. I look forward to speaking to you soon.